Ladies and gentlemen, it's your boy, Ryan Dins, and on today's episode, we're going to talk about 5 stocks that you should be accumulating for 2021. Let's get into it. Alright, the first stock that we're going to talk about is T, also known as AT&T. It's a telecommunication company. A bunch of you people watching it right now are like, oh, looking at your phone? Oh, look, I use T. Yeah, everybody uses T. Their biggest competitor is Verizon. And although we're not talking about Verizon, that is also a pretty good buy, but I'm going to pick T over the two. I made a separate video about that. You can go check it out if you want on comparing the two. But T kind of beat it out because it's got a higher dividend. It's really oversold right now. I mean, the price is pretty good. I was buying it a lot under 30. Right now, it went on a 2-day run, and it's around like 31.5 now. And that's a little bit high for me, but if I see it dip back below 30, I'm going to buy some more. The beautiful thing about T, and the reason that this is the one that I'm going to say first, it really has a high potential of being over $40 in a year. After this big rally we've had since COVID, sort of getting better, I guess, even though it's not, but you know, the Fed pumped money into it. Everything went on a rally. Everything did. All 4 other stocks that I'm going to talk about today have gone on somewhat rallies, except T. It's just been around 30. Everything else has been rising. That's been staying the same. But with that being said, that's one of the few buys now that you can still buy. You know, another stock on our list that we're going to talk about in a minute, Abbvie, that's kind of a little overbought right now. T is probably the best deal out of any stocks that I'm going to talk about today at the exact moment. And it has a 7% dividend. And it's also a dividend aristocrat, which means it's been increasing its dividend for over 25 years, which is huge. It's going to continue to keep raising those dividends. One of the things that I want to talk about real quickly with dividend increases, a lot of people will look at a stock and say, oh, it gives you $1 a dividend a year, and you know, the share might be 50 bucks or something. You'd be, oh, what's $1? But the thing is, these dividend aristocrats, they increase the dividends every year. So maybe it's $1 now, it might be $2.50 in like 10 years. So if you own that, if you own shares of one of these dividend paying companies that keep increasing its dividend, not only will the share price gradually raise over time, but also the amount of payments you're getting. So time in the market is better than timing the market, because if you buy it now, it will continue to increase. Now our next stock that we're going to talk about is Abbvie. Abbvie is a pharmaceutical company. I always see their commercials on TV. Humira is their biggest drug, and in my opinion, this is the strongest pharmaceutical company to buy right now. It's got a great dividend, over 5%. You know, the only bad thing I could say about it right now is it's over $100. For a while, it was a great buy when it was under 90. I was picking it up left and right. Every week I was buying at least a share. You know, now it's a little over 100, but with that being said, with these corona vaccines hype, it does still have a lot of growth. A lot of price targets from analysts are over 130. So at 105, it's still a great deal. Not as great of a deal as it used to be. You know, everybody talks about Abbvie and Pfizer being the top 2. I think Abbvie's a better deal. I think it's a better long-term play. So that's another reason I would like to get my hands on Abbvie. If you want to get into pharmaceutical, it's definitely the best stocks for dividend investors because the dividend's very high right now. All right, our next stock that we're going to talk about, this is a REIT. It is called Realty. A REIT is basically a company that invests in real estate. It's like more like a real estate trust than it is a stock, but it's traded like a stock in New York Stock Exchange and other global markets. I like O a lot, anything under 65. Right now it's around 60, which is a pretty good deal. Anything under 60 is a great deal. And the beauty about O, as well as many other REITs, is they pay monthly. Most stocks only pay once every 3 months. The beauty with REITs is they pay every single month. Basically, when you get that monthly dividend, if you automatically reinvest it, you can get the compounding interest quicker. Obviously, something that pays a dividend every month is going to compound quicker than something that pays every 3 months. And basically, compounding means you buy more, so then the more stocks that you get, in turn, get more dividends. So you want that to happen as quick as possible. That's why I like O. In my opinion, it's the best REIT there is. If you look at the stocks that I'm talking about today, and if you go in Facebook groups about dividends, I have one, check it in the comments. If you look at any of these groups, if you look at any of these other YouTube channels, if you look at what the analysts are saying, these are very common dividend stocks. I'm not taking risks here with my top positions. These things I know the dividends are going to grow through time. I know that the stock is going to go through time, because all these stocks, they're not just dividend stocks. They're dividend growth stocks. They're expected to grow. They're expected to increase dividends. These are going to continue to increase through time. All right, now the next two that I'm going to talk about have low dividends, but they have very, very high growth potential. And the first one is going to be Apple. I don't even got to talk to you about Apple. You're probably watching this video right now on an Apple phone or an Apple computer. So you guys already know how big this is. They're expanding to different markets. A lot of people might say, how can Apple possibly grow anymore? Everyone already has an iPhone. Everyone already has a computer. Well, it's not about America or wherever you're watching this. Maybe you live in a different first world country. It's about the third world countries starting to get iPhones. It's about the third world countries starting to get laptops. This is something that's just going to increase through time. Eventually, as poverty gets lifted through some parts of the world, through technology, the world's getting better for people who live in poverty. The poorest countries are not going to have iPhones, but the middle countries, the countries that are not necessarily poor, they're starting to get them. You're starting to see them in like second world countries, and even third world countries, some people have them. So with that being said, they're going to continue to grow until everyone has one. And then by the time that happens, they might have an electric car. They might have smart TVs they've been working on that could take off. Apple has constantly innovated. Who knows where they'll be in 10 years? I think it's a great call to buy it. And the dividend is very low. It's below 1%, but if you look at it, it's been increasing their dividends. It's not their fault the stock keeps growing so much. They're increasing their dividends over 15% a year, but the stock's growing like 40% a year, so they just can't keep up. But with that being said, I will continue to buy because the dividends are going to continue to increase. They're going to continue to see growth, and I think it's a great buy. This is, out of the five, the one that could maybe have the most potential to like actually make you rich. Apple is something that could grow like 500% over the next 10 years. Who knows? So it's good to have some because you never know what could happen with it. And the last one is another company that is very similar to Apple. It is a competitor of Apple. They're called Microsoft. I don't got to tell you what Microsoft is. It's basically you go Macintosh, and then you go Apple, or you go PC, and you might get a Microsoft. Now Microsoft has a lot of other things they have. They have the Xbox, they have MSN, ad network and websites. They have a lot, and they're constantly expanding. Microsoft is expected to continue to grow. A lot of experts say that Microsoft is a better value right now than Apple because a lot of Microsoft price targets are north of $250. Right now it's trading in the low twos. I think it's a great buy. Another one in the sense that its dividend is low, but it's just because the price is increasing. They keep raising the dividend, but the stock is growing so fast, it just can't keep up. So I'm gonna hold this because stocks like Microsoft as well as Apple, they might have less than 1% dividend now, but they might have a 10% dividend in 20 years because they're gonna continue to increase. And if the price doesn't continually go gangbusters and kind of stabilizes, you're gonna see that dividend yield increase. I think these are 5 great buys. I would say that anybody who doesn't want to take a ton of risk and make long-term money over years, putting it away for retirement, putting it away for like 10-year holds, these are all great ones. I continue to buy these almost every week, and I'm watching my portfolio grow. And granted, everything's good right now. The market's been on fire. But these are stocks that in 2021, I'm expecting to see a crash. I'm still going to buy these during a crash. I hope a crash happens because I'm going to cash out in 20 years, maybe 10 years. I'm not looking to make money in the next year or two. So if these things crash, I'm just going to buy more, knowing that I'll be able to get cheaper stocks so that I can grow my dividends as cheaply as possible. So that's the video for the week. Make sure you subscribe to the channel and hit the like button. It helps the algorithm, helps the channel pick up steam. The more progress I make on this channel, the more value I will give to you people for free. So please try to help the channel and continue to watch, continue to buy those dividend stocks. And I'll see you next week.